Hello guys, is everything okay? How are you doing everyone? So let me know if you can see my screen, can you hear my voice? Please let me know in our chat box here on YouTube, please. Okay, okay, I can see that some some clients are coming in. Hello, Yuan, Carlos, Virmatas, hello, how are you guys? Enes is also here. So it looks like that everything is fine. So let's start it with our new webinar for this week. So as you know, stock finished pretty strong on Friday. So it looks like the risk on is here. We are seeing the S&P 500 that broke out of the range. So usually when you see week closing very strong on Friday, you can expect that Monday, Tuesday session could be very similar, especially on Monday. So I would be looking for further upside. Maybe on risk on is in play for this week, and this could potentially move to the could potentially cause some new resistance for US dollar and US yields. But for now, that's still not happening. Okay, so it will be pretty interesting to see what will unfold. Now, if you're watching our latest video recorded on Friday, we were also mentioning a quick outlook for the S&P 500. We said that we are seeing prices in a wave 4 expecting push to the upside into wave 5, and today you can see that market is breaking pretty nicely here to the upside. It's an updated wave count, and if we are in a wave 5, there's still room even for 5,000 here. And keep in mind that wave 5 should be made by 5 waves, and since this move to a new high is only in 3 waves, it can be already the beginning part of this wave 5, meaning that we will see more upside, meaning stocks should stay in uptrend. Or if suddenly, let's say, we see a reversal back to the downside towards this trendline support, then this will be more complex correction. But good news is that still will be part of our ongoing recovery, because the recovery cannot, or impulsive trend cannot complete itself with 3 waves moving to new highs unless you are seeing an ending diagonal, which obviously is not the case, right? So I'm thinking about more upside, and now we're wondering if maybe dollar is really trading around resistance. Before we go to some of the dollar chart, let me look at this chart. Keep in mind that here we have below the S&P 500 US yields in the middle, then you have the US dollar, and you can see that the S&P 500 has seen a pretty strong move to the upside here, okay? But the US yields and the US dollar are not really moving to the downside yet, okay? However, I still think that if risk on towards, with the S&P 500 towards 5,000 will resume, then sooner or later even dollar should give up, okay? But maybe Mondays are not very good to say that dollar has stopped out. I just think that maybe for the start of the week it's good to be a little bit more patient and wait to see if really are going to see maybe on dollar index maybe another push to a new high, and then a reversal lower. Before we go to maybe to dollar index counts, let me just update you on this US yields. We talked about this last week. Okay, we said that wave C to the upside is still missing, and so far this unfolded very nicely, meaning that we are or can be very close to completing this correction. So if stocks will resume higher, I think that US yields will come to the downside. So we moved here into this previous area of consolidation, but that still could be even retested the higher termination point here of this minor correction, because that's also usually the case. Okay, so we'll see how the markets will unfold, but I still think that sooner or later these FX currency pairs should do the catch up if really the S&P 500 and stocks in general will stay in uptrend. Okay, now looking at US dollar index, now here we have this actually two wave counts. Now here we have this pre-wave rally from that end of 2023. Notice that wave A then broke this channel, impulsive channel resistance line, then wave B was consolidating around this trend line, and then we are seeing now this next move to the upside. Okay, so now we are seeing actually wave C here coming into potential resistance. Now 104, 104.30, that's the resistance area. But if you look very closely here at this current price action, it's not really showing us any kind of impulsive activity from the highs. Okay, so that's why I'm saying that you have to be really careful here, because we are not seeing a potential top yet. Okay, for a confirmed top, you want to see, I'm talking about the confirmed top for this week, let's say. Okay, you want to see this broken trend line and clearly an impulsive drop back towards these wave B levels. Then of course we could say that correction is completed and that we are headed lower. But no matter how I look at it, I still think that this whole recovery is corrective, and that sooner or later we will see more weakness, because drop from that October of 2023 highs was clearly in 5 waves. Okay, another interpretation which is also still valid is that this is actually a wave 4 rally, and that it belongs to still ongoing bearish impulse. But even this one suggests obviously that this is a temporary recovery and that we should continue lower after this correction. Okay, so I am expecting dollar to come to the downside, especially if stocks will continue higher and hold this trend that we were seeing at the end of last week. Okay, now if we also do some comparison here on where I have it here, okay, on the FX markets, I will look at this overlay chart. Okay, don't be confused by this many comparison charts here. What I want to see, okay, okay, so here actually that's the S&P 500 in red. Okay, and you can see where the S&P 500 is from, let's say, from that low here back in, which was probably here in Wednesday of last week. Okay, and you can see how very nice and strong move to the upside really unfolded here on the S&P 500, but still here below, FX markets are actually sideways. And what's interesting is that Kiwi, New Zealand dollar, Mexican peso, okay, even Aussie and commodity currencies in general are not catching up this move on stock market. Okay, but if you look closely, maybe, and go back to November, okay, why I'm going back to November of 2023 is because back then, again in red is the S&P 500. You can see that the S&P 500 was the first one that really started to move sharply to the upside. Okay, and then when stocks stayed in uptrend, in recovery mode, what actually happened is that Kiwi, Mexican peso, even Aussie have been seeing a very nice strength to the upside. Actually, I wanted to look at the whole month of November. Okay, let me just do it a little bit better. Okay, so that's November, that's already December here. Just a second. Okay, that's the beginning. Okay, so you can see here the S&P 500 started to break to the upside here back at the start of November, when actually this few weeks bull market lasted. That's when also New Zealand dollar later on finished this month much higher. So I still think if the stocks will resume to the upside, that Aussie and Kiwi, which by the way are trading at a very nice potential support, could also see some nice bounces. Okay, but we are not seeing any kind of this kind of activity right now. But if dollar index of course would come to the downside, stocks will just make another high, then of course New Zealand dollar, Aussie dollar, if these moves will last, will, I believe, will join this cycle as well. Also New Zealand, from New Zealand we will get inflation report, I think that tomorrow. Okay, so this one should be interesting to watch. Also, then you have Bank of Japan as well tomorrow, as well as ECB. Then we have US advanced GDP and PC price index from the US as well. So we have some very important data still this week that could potentially influence these markets. But generally speaking, we just have to respect that risk on is here, but maybe the US yields and the US dollar will wait a little bit longer before they join these current risk on cycles. Okay, so what I wanted to show you, this first part is very simple. Stocks broke to the upside. I'm waiting on US dollar to come down, and I think if that will be the case, then even Kiwi, which is very weak, same as Australian dollar and Mexican peso, will also join the uptrend. And on those currencies, I believe there can be opportunities on the long side if stocks will really hold gains. Okay, now before we go to maybe to some commodity currencies, let me take a look on the euro. Okay, so euro dollar, same obviously like dollar index. We are seeing 3 waves move to the downside. Notice that this wave C is a little bit short here, so that's why I'm maybe hoping that another move to the downside will occur here. Also, if this dollar, let's say dollar strength, will this final piece of this puzzle of that wave C to the downside here on euro dollar pair will show up today, then I really would be quite confident that this dollar strength will not last through the whole week. Okay, so usually when you see Monday flows in a very strong one in direction of one currency, normally those flows, not always the case obviously, but normally those flows can be reversed by Tuesday or Wednesday. Okay, on Tuesday or Wednesday. So if we're going to see another push to the downside, I think that could be a very attractive support coming in play here on euro dollar. And also maybe the ECB, which by the way is somehow hawkish. We all know that they are not considering to cut rates. It's the opposite story in the US, but of course this has changed a little bit because of this inflation and latest jobs figures in the US. But still, I think that the ECB is much more hawkish, obviously, compared to Fed. So this is something that we have to consider, and potentially if we are going to see move into this support, it could be a very nice bounce away from it, in my opinion. As long as the market is trading above that level, of course, I will be looking for more gains. So, of course, I will be tracking very closely the intraday price action like we always do on a daily basis for our members. So, if you're not a member yet, make sure to check our services and we will keep you updated with these charts through the week, right? Okay. Also, let's take a look now on cable. So cable is trapped in some kind of a range here. But what's good about cable so far is the drop from the recent highs is in 3 waves, but I'm not really convinced if that's already the end of a wave 4 or can be a wave 4 a little bit more complex. Now the reason is this recovery, which on a smaller time frame looks very slow, can be still maybe corrective. I really do not see a confirmed price action yet here for a wave 5, but this can change obviously. If this trend line is broken, then more upside can be seen. But what's good about pound is that last week, if I'm not mistaken, the inflation on a yearly basis came out around I think 4% up from 3.8, I think. So cable obviously can stay in uptrend. Speculators firstly thought that maybe Bank of England should not be hawkish anymore. They should change their policy. But now with this inflation data, maybe again this is confirmation that even speculators will now keep trying to look in the similar direction like Bank of England, and this could keep this cable in uptrend as well. So I'm looking here and will be expecting wave 5 move to the upside. I think that 1.3 level is a very potential targets for the next few weeks. But as I said, the dollar, if really will stop at the resistance dollar index, then of course this pair can easily accelerate to the upside. It's already doing very well now despite the dollar index trading at the resistance. So pound has been one of the strongest over the last through this whole January actually. Okay, let me just see some comments are coming through. Danish C is dollar index appears to be in reverse head and shoulders breakout. And okay, I like head and shoulders, but somehow I try to pay more attention to them, especially if they match with the Elliott wave principle. Then somehow I can increase my confidence. Now it would be great if you could cover S&P Nifty India. Yeah, maybe this will be covered in our next webinar, so I can prepare some charts and look at these markets by then. Okay, or you can find me on Twitter, and I will definitely try to respond there. Now let's take a look also on Aussie. Okay, so Aussie, it came to the downside into this very nice support. I mean, that's really beautiful, very nice level here, termination of a previous wave 4. So as I said earlier on the US yields, right, we said that prices can retrace all the way even to termination point of wave 4 when you're tracking higher degree correction, when the previously 5-wave cycle had the normal shape, obviously. So this has been the case. We are seeing a very nice bounce so far to the upside from, not really from the 61.8%, but we came close enough here to this fib level. Also, we stopped at the lower trendline support of this potential corrective channel, but again, it would be too soon to say that we are completing this drop. Yes, it's a very nice support so far, the market is respecting it, but we are not seeing a bullish reversal just yet. Okay, we could be just trading neutral here, could be, who knows, potentially wave 4, and you will see another drop to the downside. So it's very important, if you're looking for maybe for some kind of a setups for the next few days, for this week, that you wait on a confirming price action, because whenever you will wait on a confirming price action, you will be able to specifically identify the invalidation level, right? In such case, let's say that market will rally back towards and back above this, out of this corrective channel, and we see prices recovering above 66.60. Okay, then this would not be wave 4 anymore, and most likely this will be a completed 3-wave drop. Okay, in such case, what you would expect, let's say that market will recover very sharply here, that we will see a minimum 3-wave recovery. So then your potential setups will occur after that pullback, while the stop loss could be that low. Okay, but for now, to go with this plan, it's definitely too soon, unless you're trading on a higher scale and you know that invalidation levels are down here. That's a different story. Okay, but for now, if you're looking for more kind of a short-term setups, it's definitely recommended to wait a little bit longer here to make sure that correction is completed. Okay, now let's take a look also very quickly on dollar yen. Well, the reason why I want to bring dollar yen up is because we have Bank of Japan a new policy announcement tomorrow. We will see what they will deliver, but so far I still think that this could be potentially completion of this recovery here from January of 2023 to this end of 2023. We have seen this channel broken, and now we are recovering back into this channel very close. Actually, we can say that we are already at the resistance here. So based on Bank of Japan, based on timing, based on price, based on these trend lines, based on deep of a correction here, I think it's a pretty interesting level. I realize that this is very strong recovery and that there can be a lot of disappointment if nothing will be changed from Bank of Japan in the next few months. Then who knows, we can even revisit this double top. But for now, it's still very nice level here. Who knows, we will see maybe some kind of interesting volatility tomorrow. Now, what I'm looking at here is actually I'm looking at the line chart, as you can see. Okay, now why I'm looking at the line charts, where sometimes you will see that bar charts, because of different volatilities, because of a lot of spikes, is not that clear. So in such case, if I don't have a really strong view, what I can do is switch to a line chart to avoid all of the noise, okay? And what I see here is a very nice recovery. I know, as I said earlier, it's a sharp one. Could be even some kind of an impulse in progress if we are not seeing a reversal down by the end of this week, okay? But so far, as I said, we have that trendline resistance, we have the BOG, and we are at pretty nice, interesting area here, around the 61.8% to 78.6% of the previous decline. So if BOG will maybe surprise, if speculators will believe that they will really change the policy sometime this year, then dollar yen could come to the downside. And if that would be the case, let's say we see drop towards 145 or even lower, then I think that more weakness could be seen and there can be opportunities on the short side, okay? But for now, it's a little bit risky here unless you have a really well-defined trade plan here, okay? But of course, keep in mind that even yen crosses came quite nicely higher here into potential resistance areas as well. And of course, if dollar yen will be impacted, same will happen with other yen crosses here, okay? Now let's take a look also on maybe on silver. Now silver is breaking to the downside, okay, for the last few days. So what I want to look at is here, okay, on a bigger picture. Actually, that's daily. Let's take a look on a weekly, okay? So on a weekly, well, nothing is really, we are not breaking out yet, okay? It's still a range. Actually, we are just approaching the trend line. So before saying we are breaking to the downside, unless you are looking at the smaller time frames, you really have to scale out a little bit, zoom out, and check where what is going on a higher scale. So clearly we are still in consolidation. And what's good about the consolidations is that whenever price comes to the downside, you can expect that it will stop there unless you see the breakout, okay? But I'm not sure what are the chances for this breakout to happen, because actually we are now in this consolidation for around what, 3 years or so. So it's very important to wait on a breakout before you may continue to trade in this direction. Until then, you should just be aware that this choppy price action could resume further. So from an Elliott wave perspective, what I'm looking at, I'm looking for an ABCDE structure. So it's a triangle with wave B potential now in late stages. So if I'm right, that's yet to be seen, but so far I think that this trend line is a very nice support. Also, we said that stocks are breaking to the upside. We also said the dollar is moving into potential resistance, that the US yields could potentially come to the downside. So all of these factors could be potentially very supportive for metals. Of course, metals could be very attractive as well if inflation is higher, which recently has been the case, okay? Or if something, some geopolitical issues again will unfold, then again, gold, silver could be very attractive among investors. But from a technical point of view, I still think that that's a very interesting level here, around $21 to $22. But again, if you are more like a short-term traders, you should watch for? Well, you should watch what will happen at these levels, okay? Because if I'm saying that that's the support, it doesn't really mean that this support will hold unless the market see a reaction away from it. So support is just a price on the chart. It's not a real support unless you see the price that will make a bounce away from it. So to see if I'm right, of course, I will have to wait a little bit longer. And if we suddenly, let's say that we will see 5-wave recovery away from that area, then we will say that market has bottomed at the lower side of the range, and then you could look for potential opportunities on pullbacks, and you exactly know where your stop loss should be placed, right? So it's something, I'm looking at the current drop to be something very similar like been the case here in October of 2023, okay, at the start of that month. So what's actually been the case here, a lot of traders have been turning bearish here on silver. It was a pretty aggressive drop, but if you see closely, it's been a 3-wave drop, and then later on we have seen a very nice reversal that broke this trend line resistance, and that was the confirmation that bottom is in place. And you could be expecting much more upside after a correction. So something similar is what I want to see here to make sure that wave E is coming to an end, because you never know. I can be wrong and we will completely break all of the supports, okay? Even towards $20. But that's why I'm saying that confirming price action, it's very important. Of course, you can still, or someone will still be looking for maybe for some buying ideas here, but maybe if I would be that guy that would be looking for longs and I don't have a confirming price action, I would be waiting a little bit longer, definitely for Monday and Tuesday, and then make an entry maybe with a very small position size. And whenever price bounces, if it bounces, then I will add to my position when I see that this support is really holding and that I have enough confirming price action to say that we are bottoming. And that's when you're at, okay, to your position size. Okay, so that's about silver. Now let's take a look also. I'm not sure if you watched this, what it is, just a second. I'm not really sure if you watched this video on PayPal and single stocks that I made on Friday. Okay, I will put it here. Okay, so I'm not sure if you watched this video. I put it on into the chat box. So on Friday I discussed about some single stocks. I covered PayPal, and the reason why I covered PayPal is because let me see where I have these charts. Okay, because the CEO of PayPal said that they will shock the world, that they will come out with some important news. I think they said this week. I'm not really sure if I remember correctly, January 25th. So we will see if they will announce anything. But so far we have seen a pretty nice rebound on PayPal. Okay, so let me just find it where it is. Okay, so we said that PayPal is really showing nice potential bullish setup here because of an ending diagonal. Okay, we also said this and highlighted this head and shoulders formation, and more importantly, then on Friday we finished the week above the previous swing high. So this appears like a very nice and beautiful breakout here. Okay, and financials, by the way, finished the week quite strong. So let me check the correlations here. So going back to Tuesday. Okay, so that was Tuesday, January 16, because on Monday markets were closed. It was holiday. Okay, so you can see here the technology sector obviously still strong, but below it behind it we have financials that also turned very nicely to the upside. So PayPal has made a pretty nice strong higher here, strong break higher. So I think that there is room for much more upside. Of course, earnings will be in 2 weeks or so, but I'm looking for price that can resume all the way up to this unfilled gap to around 73. So in pre-markets we can see that stock is already going to open around 68. So looks like maybe even some breakaway gap could occur here, especially if that would be maybe if just a wave C, maybe even wave 3, who knows. Maybe this gap could then stay even open. So I'm definitely looking for more upside here on PayPal. Also, I looked at Visa as well here, and what we have seen here is also very nice push to the upside. I think that we have very beautiful ongoing price action here. What I love about this one is that this recovery, okay, is much sharper one compared to this first leg. Okay, so normally when you see this market picking up the momentum, I think that these moves could actually last, because it can represent the very sharp personality that you want to see in the middle of a higher degree extended wave 3, because wave 3 is normally the strongest leg. But even if you look just and maybe just focus on us on this recovery that can last only for a few weeks, well, it's still an incomplete 5-wave rise, in my opinion, away from that October low. So after the next pullback, I think that this market could see even more gains. But just be aware that maybe now the price is a little bit too high here, and we could see some retracement before this market could resume even higher. And obviously the supports would be at the previous fourth wave. Now, as I said, technology sector is doing very well. I've been looking at Adobe on Friday as well. So we said that this gap could be unfilled in that video, and we are already trading around that area. Now, what's the most important is the drop has been in 3 waves, so definitely I will be looking for more upside. Now, if suddenly, let's say in the next few sessions, market surprise and comes back to 590 or so, then this wave 4 will be a little bit more complex. But what's good is that still could be giving us an interesting opportunity to join this uptrend if lower supports will be retested, because I still think that even if we see prices reversing back to the downside, it will be part of corrective fourth wave that belongs to ongoing higher degree incomplete recovery. Okay, okay, that's an update for those stocks since Friday. Now let's take a look also maybe on cryptos. Let me see what we have here. So as you know, cryptos are still in a pullback mode. I think that this pullback mode could last a little bit longer. What we are seeing here is this is crypto total market cap. Potentially this has been a 5-wave decline, okay, and now you are in a 3-wave corrective recovery for a wave B. So very nice potential resistance could be around 1.6566 trillions here before from where market can turn down for a wave C. So I think that Bitcoin, Ethereum, they could stay in a potential consolidation for a little bit longer. We are actually tracking 2 wave counts. Now the first wave count still represents an ABC drop, but if let's say that someone would argue that Bitcoin will bottom now around 40,000, okay, then you can see that wave C, okay, that wave C would be very short, okay, compared to wave A here, okay, and usually that's not going to work. If you'll try to label so short wave C compared to wave A, you will be right, I don't know, maybe once in 10 times or something, okay. So definitely you have to respect some personalities and guidelines of the each substructures and corrections that you are tracking, or impulses or whatever, okay. So I think that when possibly wave C is still ongoing now, this could be even small wave 1, wave 2, you will see more weakness for wave 3 of wave C. So very nice and deep support could be around 38,000. That, in my opinion, is much more attractive and much more interesting. Now, if suddenly, let's say that market will rally, then I would say that we are still in wave A, and resistance would be anywhere here between 43,000 to 45,000. Okay, so let's see what will unfold over the next few days for this week. But so far I don't think that Bitcoin is attractive. Yes, it's potential support, but because this drop was a very sharp one, I just think we should respect and be aware of potentially maybe even more complex, more deeper wave 4 here, if we really think that market is in a correction. But still, it's a correction, just ongoing, in my opinion, but there can still be opportunities on the upside whenever this pattern will unfold. Okay, now let's take a look also, maybe a quick one on the Ethereum here. Could you go into over pound yen? Actually, I think that we made some updates, free updates on pound yen, if I'm not mistaken. Okay, I will check this out and I will also post it on Twitter, so make sure to maybe to follow us on Twitter. Here's let me okay, so here is in the chat box, I'm attaching the link. So here's my Twitter feed. So I will definitely look at pound yen. I could make some updates there. If I won't do it, then please just give me a reminder there on Twitter. Okay. Now let's take a look on Ethereum. Now Ethereum is coming to the downside quite aggressively here. Okay, very deep. And what is the most important probably here, at least for me, is that this current weakness did not stop at the previous swing highs. Okay, we have what, not only one, okay, but 3 swing supports here. Okay, so if that was very strong resistance, then you would love to see that this will hold. We have seen some response to the upside here in the after the first attempt, but now we are trying to come back to the downside. So I'm not really convinced that's a way forward. I would dare to say that market has stopped out here and that we will see more weakness, and that who knows, maybe even this could be some kind of a leading diagonal, if not 1-2-1-2 to the downside. So I think that even Ethereum here could step into a correction. Now if we see maybe a drop into this area, that could be much more attractive obviously for longs. Here it's a neutral zone. Definitely I'm not interested in any kind of a longs here at this stage on those markets. Okay. Mohammed is asking, what about gold? Actually gold is doing pretty well compared to silver. I think that if you look closely at your substructure from January 17, it's minor impulse to the upside. Now it's a correction. I think that gold will stay, could hold 2000 level, and the next level to the upside, if we really are breaking higher today, could be around $2,050. Okay. Okay, traders, I hope that you enjoyed this live session. I hope to see you again next week. Please press a like to support our work. Check our services, or check just our free social channels and for our updates. So I would appreciate if you subscribe to our channel, if you press a like, if you leave a commentary, if you will watch this recording a little bit later, still fine. So traders, have a good day, trade well this week. Bye.